I mean, I think one thing was really interesting is that a lot of market analysts from the September OPEC meeting, when we got that incremental increase, you had a number of analysts actually predicting that there would be a significant price increase going into that OPEC meeting, significant price reduction, because we had oil prices declining. And I think one of the things that has been really fascinating to watch is, just how surprised the White House was by the size of the cut. Now we've had this sort of spiraling situation where we've had accusations on both sides. You've had the White House essentially saying that UAE and Iraq were bullied into this decision. You've had Saudi Arabia indicating that the White House had asked for a 1-month delay. And so the question is, what is really going to be the off-ramp? Because what I keep pointing to is the fact that we're going into the 6th package of sanctions of the EU on December 5th. We could potentially have 1.5 million barrels of Russian oil that will no longer be going into Europe. And the question is, who's going to backfill this? And can we afford to have a major falling out between the United States and Saudi Arabia while we have this war with Russia and we have these very serious sanctions set to kick in?
Absolutely, because at the end of the day, the market itself is going to react to, as you say, what's going to come down the pike in terms of sanctions. And also, as I was pointing out yesterday, we don't have a crystal ball. There are a lot of known unknowns here, what that's going to do to the amount of oil that's on the market, and also what that could potentially do to the geopolitical situation as well, because you have to remember that China is a big piece of this picture. We've heard that again and again, as you know, from these OPEC Plus producers. They're worried about recession, they're worried about inflation, and they're worried about China's ability to consume.
No, I think that's absolutely right. I mean, this has been a significant headwind for oil, has been the zero COVID policy in China. And we don't have any indications of when that's going to be lifted. And I think from the standpoint of, the key OPEC producers, if you think about what was happening going into that October OPEC meeting that's been so controversial, is we've had this fear of a recession driving prices lower. And so I do think they were looking to put in this circuit breaker in the market. And there seems to be this difference between sort of what the White House had as a price target and what a number of, key OPEC producers had as a price target. I'm not sure that the OPEC producers ever sort of agreed to sign up for a $75 price floor. I think there was concern. Remember, we had Brent hit $82. I think they were concerned that it was going to fall into the 70s because of these recessionary concerns. So I think what's going to be very important to watch, again, is the way forward, because we do have these sanctions set to start, the first significant sanctions on Russian oil. And the question is, are we going to see Middle Eastern producers backfill those volumes into Europe? Are we going to have significant disruption when we have the price cap plan launch? And so we're really concerned about sort of what happens at year end. And again, I'm not sure the oil market can have this war with Russia and the sort of simmering, spat between the United States and Saudi Arabia if we're not going to have significant supply disruption.